Hello and welcome. You are watching Business Today Television. I'm Sakshi Batra and this is Market Today. Let's start off with the recap in the Indian stock markets and then we'll come to the trading setup. And of course, we'll be getting you top voices from the stock markets to help you understand the key market strategies you must be adopting at the current stage. Now, the Indian equity markets extended gains for the second straight session as of yesterday. The Nifty opened with an upside gap of about 106 points on Wednesday, extended the gains through the course of the day and closed the day's high as well. Now, this was after a strong start. The index remained firmly in the green with minor intraday dips, but they were also quickly getting bought into, of course, led by the ease in the geopolitical tensions and the war tensions that were so far gripping the sentiments on the D Street. What happened overnight on the Wall Street? S&P was largely unchanged but less than 1% high from all-time high levels. So keep an eye out on that. Nasdaq was up by about 0.2%. The Dow Jones slightly lower, about 0.25% odd or so. But the IT names were in focus. Nvidia, for instance, was up 4.5%, hitting an all-time high level. So the record high moves are coming back on the US markets as well. What more is important to see is some of the statements that are going to be impacting the sentiments across the board, and not just the D Street but globally as well. NATO leaders have agreed to increase the defense spending to 5% of the GDP by 2035. Spain has withheld from this commitment, spurring President Trump's threats to increase the tariffs on that front. But President Trump has also sounded positive on Europe otherwise. We've also seen that Donald Trump has said that they do not see Iran now getting back in the nuclear business. He's also mentioned that if Iran is back in the nuclear business, then they will be there as well. Now, reports of US-Iran talks are coming in from probably next week, even though there is no confirmation on that from Iran's front right now. Now, what's happened on the US Fed front? US Fed has proposed easing of capital requirement for Wall Street banks as well, and the proposal to ease the enhanced supplementary leverage ratio is going to be important to track too. Following this, what is happening in the Asian markets? They're trading largely range bound, mixed in trade. You can actually see Hang Seng and Chinese index muted in trade this morning. And you can also see the Nikkei up by about 1%. So the Japanese index is doing much better. Kospi is down by about 2%, while the GIFT Nifty is still indicating a positive start for the Indian equity markets. The foreign institutional investors yet again net sold in the Indian equities, 2,427 odd crore rupees, while the DIS indulged in net buy of 2,372 odd crores right now. Let's welcome our guest on board now. We have Mr. Deven Choksi, MD of DR Choksi Finserv Private Limited, joining in soon on the program to discuss with us the strategies of the markets, but we'll also get you to understand what exactly are the key stocks that you must be watching out for. Remember, we used to talk about the block deals on an everyday basis. PB Fintech will be in focus today as co-founders Yashish Daya and Alok Bansal. They're expected to sell about 5 million shares, 5.05 million shares, representing 1.1% of the company's equity through a block deal worth around $106 million as per some of the reports that are coming in. So that's going to be something important. Also, we are given to understand that MobiKwik will also be in focus because of some block deals. I'll get to you some more details as and when they flow in. From the other stocks, you can look at FMCG giant Nestle today. They will be considering a bonus issue of shares at the board meeting on Thursday, that's June 26 today. Of course, Adani Enterprises will also be in focus. It's announced that its management committee has approved a public issue of non-convertible debentures with a base size of 500 crores and additional green shoe option of 500 crores, totaling 1,000 crore rupees as well. So that will be in focus. From the metal pack, I'm looking at JSW Steel. It's filed a review petition in Supreme Court with respect to Bhushan Power and Steel Resolution Plan. We'll see how it comes about. Texmaco Railway will be in focus. It's got an order worth $62 million, approximately 535 crores from Kamalco SA in Cameroon. So we'll have to look at that as well. Fundraising plans, AU Small Finance Bank will be in focus. Canfin Homes has also, the board has approved a 1,000 crore rupees QIP. So we'll look at all these companies as well. From the metals pack, I'm also looking at Lloyds Metals that's got an environmental clearance for expansion of its iron ore mining capacity to 55 MTPA, that's metric tons per annum. And of course, initially the company will be mining 26 MTPA of direct sales ore as well. So something like that. We've already marked out Canfin Homes, but once again, you can get to know that the board has given a nod for raising 11,000 crore rupees via debt and equity. So that will be in focus. What are brokerage houses really looking at in trade today? First up, we will look at Jefferies on the consumer finance businesses. They have talked about how retail credit demand has slowed during the March 2025 quarter, with the new loans originations up 5% on a year-on-year basis. Origination and credit growth, which is better for NBFCs versus banks. They also believe they are stronger in LAP, weaker in housing, and of course stronger in higher ticket segment, and delinquency trends were stable as well. So those are some of the brokerage houses reports that you can look at. Let's now welcome Mr. Devin Choksi, who's now joining in, the MD of DR Choksi Finserv Private Limited, who's now with us. Warm welcome to you, Devin sir. Thank you so much for taking the time out. It's always a pleasure to host you. We're meeting after the entire markets have faced the geopolitical tensions between Israel and Iran. Now they seem to be a ceasefire and a truce that seems to be holding on, and the markets inched up after that yesterday. How are you looking at this up move in the markets? Can we safely say that the markets have gone forward and probably put these war worries on the back burner? And of course, we will now be looking at the next big trigger. That's July 9, not too many days, and yet there is no sign about any tariff talk or deal with India so far. How do you see the market, sir?
Yes, good morning, Sakshi. Couple of gun-pointed loaded questions from your side. Well, I think the first one would be easier to answer. I think already the destruction has happened. Now the construction should start. And that's where I think all eyes should be. That ceasefire would mean that eventually both these countries typically I think were destroyed a lot of assets. They are likely to get into the reconstructing them. And that's where probably I think companies in India and the talent out here, skills out here, will probably get better opportunities as far as the business is concerned. Be it construction-oriented businesses, be it supply-related businesses, consumer products included, or for that matter, all the industrial products like metals and commodities are going to be in demand as we see it in coming months. Given that situation, given the situation that in Russia, Ukraine also, I think are now coming down to an extent, we believe that I think things are likely to be on a better track hereafter, and the prospects will become a brighter. Should that happen, commodity would be the first one to jump up from current levels, and that's where I think our approach would be to look into some of these businesses. As regards, I think the US tariff is concerned, lesser we speak, better it is, because I think they keep on changing every single day, whatever the term that they want to adopt. So maybe let 9 July come up and then we talk. But as far as I am concerned, I see Indian companies are relatively far resilient. And I don't see too much of a disturbance happening because of the tariff-related subject.
Okay. Very briefly, let me just mark out for our viewers, the first pre-opening tick is on the higher end. We also hit 25,300, and then we are now hovering around 25,275 in the pre-open trade, 0.1% high-end trade. We'll come back to the pre-open rates once they have settled at 907, 908. Devin sir, when you say that Indian companies are far more resilient to deal with such issues worldwide, are there sectors that you would prefer more than the others? Do you think domestic stories are better to be tracked? Okay, we'll try and get back to you, sir. We'll try. Can you hear me? Okay. Okay, we'll try and fix that for you. Mr. Devin Choksi is unable to hear me. Okay, now he can, I think, hear me. Mr. Choksi, can you hear me, sir?
Yes, please.
Okay, so I wanted to ask you, as far as when you're saying that Indian companies are, far more resilient, are there any sectors that you're preferring more than the others? Probably just for the fact that external noises and any impact externally will not so far and so much impact these domestic themes. Do you think that is the right approach right now?
So we continue to remain bullish and overweight on the financials. We believe that this is one area where probably the lower interest rate, lower inflation regime is definitely going to work and work for better. So the weight in the portfolio is definitely high in this area of activity, and we believe that they are clocking around 20% plus kind of a CAGR growth in general. Some of the NBFCs are even quoting higher at around 25 to 30% kind of a CAGR growth. So I think we find that this business remains, I think, absolutely resilient to the external shocks at this point of time. And concentrating or adding more capital into that area would definitely make relatively more sense as we see it. As far as I think the selecting one over the other, I don't think that that's a call we take on sector basis. We do look at individual companies, and that's where our confidence is high. For example, I was alluding with metals. We like the white metals, zinc and silver included. As far as I think the portfolio is concerned, we also like the ferrous, that is the steel as a commodity. We find that I think they have the opportunity going forward because of the reasons which I mentioned. And along with that, the energy cost, which is promising to remain low because of the lower crude oil prices. So in such situation, I think we feel that I think commodity could be slightly a dark horse, maybe it will take little time before it goes up. But I believe that I think the opportunity is ripe in this area of activity.
Mr. Choksi, I wanted to now understand with you, how are you approaching the IT and the pharma spaces, these two export-oriented sectors? IT, let's discuss that one first. We've seen the outlook coming in from Accenture after the earnings. We've seen KPIT Tech also, the indications coming in there. How are you looking at these indications with respect to what could be coming in Q1? I think within 10-12 days we will start, or 15 days we will start getting the Q1 earnings again, and that will be in focus. Q4 was not too bad. It also led to some kind of a momentum built up in the IT sector. But is there lesser overhang than last few quarters when it comes to the IT story? Is it on a gradual improvement path, sir?
So our understanding from studying various businesses, an allocation of capital towards IT spending has become imperative. Earlier days, when we would look at capitalization in the books of the companies, we were always looking at the fixed assets as capitalization. Today, we also look at, I think, the digital assets that they not only capitalize, but at the same time, they spend money on it because of the subscription models on which I think most of the applications and the softwares are available today. So I think most of the companies are spending money. They continue to spend money. Indian IT companies have been historically winning some of the large contracts, and that's where probably I think the analysts are wanting to see those large contracts coming in. According to me, I think as they operate in the agile environment, I don't think that the large contracts are likely to flow in as quickly as people are asking for because the situation remains quite fluid. So obviously, I think the smaller orders and that too, I think the quicker delivery time schedule is the new reality, a new norm as we see compared to the 20, 30-year back norm in IT business. But given that kind of situation, I think you will have to look at IT companies like a consumer companies or consumer durable companies, wherein I think their growth rate is pegged with the economic growth rate. Earlier days, I think they would move faster compared to economic growth rate. Today, I think they are moving along with economic growth rate. So if your nominal GDP is say 11% growth, then quite possible that IT companies would move in the range of 10 to 15% kind of growth. Large companies,
Okay.
mid-tier IT companies, they remain relatively more stable because I think they're a B2B solution provider in engineering R&D space, and that's where we remain relatively more confident compared to some of the large companies in Indian domain.
Okay, so sir, names, could you name a few companies that you are, positive on, and do you see continued upside? We've always seen in the mid-cap tier, names like Coforge, Persistent, Birla, Soft come to fore. Do you think these are the companies that will continue to show leadership?
They are good companies, and I think fundamentals remain quite strong, including few names can always be added to this list of names that you spread out. The point which I'm saying is about the valuation. This market has priced in most of the values for FY27 earnings, and that's what I think I'm a little bit more careful about while recommending or putting names before in front of viewers. The companies are good, but why that valuation? I think that is an approach. A compelling valuation would be, I think, more prudent.
Okay. Seems like IT could be starting on the back foot as far as the pre-open rates have settled. Nifty is indicating just a mild positive start at 25,268. All the rest of the sectors could be showing us some signs of improvement. Remember, consumer durables were in focus yesterday. That could continue to show us some momentum. Auto, infra, FMCG, those are the pockets. Let's come to pharma, sir. Now, that's something that I wanted to discuss with you. One is the overhang on what kind of tariffs can come in. Donald Trump has indicated there could be tariffs like never before seen. At the beginning, right at the beginning, pharma was completely left out, and then there was a rally. But seems like we are again going to be looking at a clear, very uncertain picture there. Then today, Jeffries has come out a report on CDMO specifically. They have met 5 Indian CDMO firms last week. They're talking about how big pharma companies are diversifying geographically and how they're looking at this as an opportunity going forward. We've discussed this space also with you, sir, as an opportunity for the next 5-10 years that could emerge. How would you look at the pharma? How are you picking and choosing the companies within this sector, sir?
So yes, I think we remain distinctly positive about the prospects going forward in the area of contract research, as which you mentioned, and the manufacturing along with. And we are also remaining very bullish about the prospects of API companies which are building, I think, the API blocks for the formulation manufacturers in the world market. So they remain quite a strong proposition, the likes of DVs, likes of Lawrence, even some of the larger companies with the API supply. I think they are relatively far better placed compared to their generic peers. Within the generic peers, some of the large companies which have developed the specialty generics or complex generics, as you know, to call it as, I think they are the ones who are having relatively better pricing power. At the same time, I think they are not having as much threat as the other generics would have in form of, I think, more tariff, etc. Because those companies and those products are relatively cheap compared to the patented products, and at the same time, they're serving larger purpose for the patient. So countries, even in USA, I think may not be in a position to stop them. They may want to impose relatively a different kind of a tariff, but I don't think that I think it's a game which will change for them. So selectively you have to be there. Again, the situation on valuation is no different compared to what other companies are. Pharmas are basically pricing in 27 earnings, in my viewpoint. And that's where probably we'll have to buy closer to that particular period, so the waiting period is less in some of the good quality companies which we have identified.
Any indication, sir, on how are you reading through this Amazon foray into the diagnostic space? How is that going to impact the incumbent players?
Uh, I don't know. I think, see, this is one area where I think the requirement of services is, I think, required, I think, undoubtedly. Not that other diagnostic companies haven't started these services, I think they already have it. Amazon has an advantage of reach to the customer, and that's where probably I think they're banking on it. I'm quite sure that I think their model will emerge. At this point of time, I think I'm not completely sure as to how they're going to deliver this model, but it will emerge over a period of time. I think they will have a back-to-back tie-up with some of the hospitals and some of the diagnostic companies, as I see it. So let's wait and see. But yes, I think this is a margin business where probably 20-30% kind of a margin is definitely understood for every services gets delivered from these companies.
Let me shift focus from these large two sectors to the more momentum oriented sectors, defense, railways. Do you think in the second leg of the rally also, most of the good news is already priced in, be it any kind of, benefits or orders that could be coming in because of these fresh world order worries of geopolitical tensions rising between nations, or the order flows that are coming in individually to the companies? Do you think most of it is again priced in now in the defense space? If somebody were to still think of entering, should one be cautious?
Opportunities and potential remain extraordinarily high. Continuity of business also is being seen, visibility is very, very high. Government is spending and making India and now exports on these programs are being conducted well. The question is that you're buying on the past earnings of around 70, 80, 90, 120 times of price earning ratio. And even if I say that there is going to be a growth of 20%, which I believe is the optimum growth that these companies will have in a year for next 3 years, for example, then also I think I find that anything you buy about 40, 50p is going to be expensive. You will have to wait for a longer period of time. The opportunity is there, but not with price. Unless the price gives you the opportunity to buy, otherwise I think the return that you will be earning out of this business will be very, very small and not as interesting. So that's where I think one is looking at. We are looking at more those companies which are the ancillary to the defense, and that's where probably the opportunity space is becoming big. And I think some of these companies which are still not fully public, I think will take time before it I think gets into public market. But yes, I think there is an investment opportunity out there.
Okay, got that. So that's the defense sector. How about railways, sir? What's your fresh view here?
Extremely bullish. I think the prospects going forward remain extremely, extremely bullish because I think government is spending money not only on the railways but also on the metros, the kind of I think infrastructure which is getting built. The new railways are coming up, the new lines are coming up, the new wagons and coaches are coming up. So all of them put together, new trains are coming up. So all of them put together, I think certainly is giving you a visibility comfort level for next 5 years or so. Again, I think they would end up growing at 15 to 20% rate of growth on a CAGR basis for next 3 to 5 years. Do you want to pay a fantastic valuation to those companies at this juncture? Is a question mark. Unless market gives you some kind of a sizable correction, which it gave November, December, January, February, March. I think these are 4 5 months in recent past have been, I think, those months where the market gave the opportunity at lower levels. Such kind of opportunities, whenever they come in future, I think they would be the better times to buy, so that I think you protect your margins on the downside.
That's wonderful take, sir. In the end, I wanted to discuss with you the IPO space, sir, on HDB Financial. What's your outlook with this biggest NBFC issue that we've seen in the recent times? Does it throw a lot of opportunity to the existing investors of HDFC Bank as well as those who are fresh investors completely? The fresh investors would be more confused where to put their money, on the parent or the subsidiary. What would you say, sir?
No, I think stepping out of the parents' shadow, probably I think HDB Financials could do slightly better than what they were doing up till now. They have remained subdued in my viewpoint, I think, despite of such a huge potential that they carry. Maybe I think they prevented themselves from competing with the parent. Now, with the separate entity, of course, separate entity was always there, but separate listing coming up, are tapping separate resources, financial resources, and creating a model which is detailed model, which is far more uh, established model, can be even further strengthened with on the lines of what Bajaj Finance has been done and now what Geo Finance is doing. So, in my viewpoint, I think this company remains very promising and potential is very high. Promoter pedigree, undoubtedly, no questions to ask. I think they are probably one of the most conservative lenders, which I like them at the same time. And new products launch, along with I think the consumer orientation that is our consumer drive, which is happening in the country, could be the next trigger. How do they successfully evolve into and adapt to the fintech part of the business could bring further success. But we distinctly remain positive about the possibilities out there in this company.
All right. Well, Mr. Joki, thank you so much for being with us and sharing all your wonderful insights with all our viewers. Markets have started to tick on the higher side, 25,297. You can see a 52 point of an uptick there on the Nifty. All the sectors barring, say, slight losses on the private banks, realty, and the IT sector is just toggling between highs and the lows at this point in time. Metals are shining bright among the sectors. You can actually see a 0.6% uptick there. Even the broader markets, the small and the mid caps are hovering high, about half odd percent up for the small cap index. Autos, infra, that's also driving the space. On the Nifty, which are the top movers? You can see BEL. Remember, 2 days of a loss is what we saw profit booking on the defense space, but today they've come back again. 1.2% higher for BEL, top mover. Nestle India, again a percent higher in trade. News flow impact coming in. JSW Steel, another one that's in focus, near a percent higher. You can see Bharti Airtel, Eternal, Hindalco as some of the stocks. So the metal stocks are garnering a lot of traction at this point in time. Within the PSU stocks, the index is up by half odd percent. What's buzzing is both defense as well as railways. Railways, you have RVNL, IRCTC, IRFC, all of that is in focus right now. HAL, BEL from the defense pack is in focus. You have oil and gas related stocks, power related stocks that have been in momentum coming back into fore. On the FNO space, you have Tube Investments as the one that is moving higher. BDL from the defense pack, AU Small Finance Bank, again, reflective of the news flows. Voltas, that's also up in trade as well. Let's also look at the downside. UPL, Colgate, PB Fintech reacting to that block deal. SBI Cards, IEX, all of that also taking on the lower end. Let's now welcome Mr. Mitesh Panchal. He's now joining in to track the technicals for all of us. Warm welcome to you, Mitesh ji. Your first take on the markets today. It's the expiry session.
Yeah, so very good morning, Sakshi, to you and to all our viewers. So far so good. I think 25,200 is what we are looking at. So if in the first hour, if Nifty doesn't slip below 25,200, then we can see a good expiry today, which will be closer to 25,500. And we see a very strong breakout in Nifty Next 50 index, which is trading at 76,800. So I think above 76,500, it's a clear-cut breakout, and going forward, it's a swing trade for the next 2 to 3 days. So if we are talking about Nifty Next 50, if you have a stop of 67,400, then you can easily eye at 68,200, 68,500. So I think within the indices, Nifty Next 50 is where the trade is. Apart from that, as far as the mid-cap Nifty is concerned, again, we are looking for 13,400, which is trading at 13,308 right now. So if mid-cap Nifty close about 13,400 today in intraday on an hourly chart, then Sakshi, there is a strong trade here with a stop of 13,000 for the potential target of 14,000, 14,200. So two indices are clearly offering conditional buys. First is Nifty Next 50, second is mid-cap Nifty.
Okay, got that. I hope this has given a lot of understanding to all our viewers who are looking at the market moves right now. Okay, let's quickly look at the markets. I think realty, banks, financials, they are slipping into the red. IT and pharma also ticking slightly lower. But it's the metals that are shining the brightest. Mitesh, what about the metals?
Yeah, so metal pack is looking really strong. And if you remember, Sakshi, I think what we have discussed since the January of 2025 is this year is all about commodities. So agri and metal both. So yes, we are very bullish on metal. If you look at Nifty Metal Index trading at 9,777, so about 9,400, it's a clear-cut breakout. So metal is looking promising. Within that, what we are looking at are two stocks. First is Tata Steel and second is Hindalco. So let us technically talk about both the stocks. So Tata Steel at about trading at around 157, above 155, there is a clear-cut breakout on an hourly chart. So with the stop of 150, one can go long in Tata Steel for the potential target of 165, 170. And as far as Hindalco is concerned, again, in Hindalco, it's higher top, higher bottom formation. So 674 where it is trading. Above 670, we have a comfort. So with a stop of 650, 650, one can go long for the target of around 700, 720. So Tata Steel and Hindalco is looking promising technically from the metal pack.
Okay, Tata Steel and Hindalco, that's looking Promising. All right. We will look at some other stock ideas. Consumer durables. Voltas is ticking higher in trade today, and the index is the second or the third day in a row that it is carrying on with the momentum. Mindesh ji, are you confident of this space further moving higher in trade, and what would your top choices be?
See, so far so good, Sakshi, but again, it is not giving us a comfort because if you look at the delivery-based volume, it is really not picking up. So as far as Voltas is concerned, it is okay. It's a trading band with a stop of 1300 for the potential target of 1380, 1400. But what we're talking about in technical terms is a serious trend reversal. That is not visible on the chart. So we'll have to wait and watch for that.
Okay, got that. Let me just highlight for all our viewers, MobiKwik. The stock is down by about 4.8%. This is after 8.98% of equity has exchanged hands. You're also looking at Coforge, where there is a 1.4% equity that has exchanged hands. These are all the stocks that are reacting to the block deals at this point in time. Sharp downtick on MobiKwik for sure. But Coforge, I think, is improving after that block deal. For Coforge, 9.7 lakh shares, that's 1.46% of equity, worth 183 odd crore rupees, has exchanged hands at 1,876 odd levels. And for MobiKwik, now there is some recovery after that initial re-jerk reaction. You can see 8.9% equity that's exchanged hands. The details would be 69.7 lakh shares, 8.98% equity, worth 161 odd crore rupees has exchanged hands at the rate of 231 rupees per share. The promoter is expected to have sold the stake in this kind of a environment there. How are you looking at these block deals, Mitesh ji, and what reactions we are seeing right now?
From the technical perspective, really confusing. So honest answer is that based on the such block deals or any kind of such statistics, do not take the view because in intraday itself you will lose a lot of money because
Yeah.
it might happen that MobiWiki is down by 1.4% right now at 242, which is at which it is trading. Probably after half an hour, you will see the stock is trading at 232.20, and at the end of the day, you may see stock trading or closing at 260. So the crux of the story is that there will be a wild moves based on such fundamental news. Either it's a block tree or X or Y. So I think in this market, what one should look at, Sakshi, is a clear cut and a simple breakout which is happening on the chart, rather than getting into these kind of stocks.
Okay, the Nifty is further picking up pace, 90 points higher, 25,300 is with us viewers as far as the Nifty is concerned. Even on the Sensex, 83,000 is with us. So, momentum that continues on the Nifty, 45 stocks are in the green, only 5 stocks are in the red right now. So, there is a broad-based buying that's also taking place. Now, Geo Financial is further picking pace, 1.5% higher, 307. Miteshi, let me ask you on Geo Finance. How are you looking at the stock? For a long time, it's been hovering around the same range, around 300 levels, maybe 290, maybe 302, 305. But are things finally going to speed up as far as the momentum on Geo Finance is concerned? What do the technicals say?
Yeah, so Sakshi, it is pretty clear when the stock is going for a big consolidation phase, all you have to do is higher time frame. So let me give you the answer based on higher time frame. For the on the quarterly chart, for the quarter ended 20th of March 2025, the high was 310 and low was 198, and exactly the stock is hovering between these levels. Now the stock is coming and approaching that high of 310. So I am of the view that on a closing basis, when Geo Finance is close about 310, it is going to be a marathon ride. And probably after that, what we will see is clearly 347 as a first target and 400 as a next target. So wait for the stock. I think the stock is trading at 308 on the closing basis. If it gives a close above 310, it's a clear cut buy with a stop of 290 for the potential target of 345.
Okay, got that. I hope this has also helped a lot of our viewers. Let me just look at a few names from the broadest index. What's buzzing? Dolphin Offshore is up. CMA Consultants, Indo Solar, that's moving up. SMS Pharma, KNR Constructions is the one that's also doing very well in trade. Texmaco Rail, 6% higher. Railway stocks are definitely in focus from the last couple of sessions. Let me come to that. Mitesh ji, are you looking at this fresh momentum in railway stocks as any trigger to probably take fresh entry anywhere?
Absolutely. Entire railway pack, entire defense pack is a good entry point. But actually, what one need to understand is that if you're not disciplined with strict stop loss, please don't enter. Reason, as we have a number of times discussed, this might be a boring, but we already discussed this, that the heroes of the last rally is not necessarily going to be the hero for the next rally. But then in case of railway, in case of defense, that is happening. So I think once the momentum is there in the place, it is going to be a vertical rise and vertical fall. So if you don't have a capacity to digest this high volatility, don't get into like IRFC at 139. Probably in next 1 week or so, what we are advocating is 155, 160. Right. So I think, yeah, one need to be in the space, but with the discipline, with a strict stop loss.
Okay, fair point. I hope this has also helped all our viewers out. But what about defense? There were 2 days of profit booking that we saw today. Some of the buying is coming back after those 2 days of dips on HAL, BL and some other stocks within the defense pack. With the geopolitical tensions between Israel and Iran also easing out, a ceasefire being announced, and probably things should get better in the Middle East. Once that happens, do you think the defense will continue to have some strength, or is it time to be cautious now?
Not at all. I think one need to be pretty aggressive on this space because I
Wow.
think in this market, Sakshi, what is clearly visible or where the buying is clearly visible is in the defense. So I think this is a pause. So after the pause, the stock is going to get back for sure. And I am of the view that yes, this is the time where one should be a bit aggressive and at least assign 5 to 7% weightage in the portfolio as far as the defense is concerned. This is a play which one should not miss. In the next 3 to 6 months, probably this kind of aggressive addition will add or generate additional alpha in your portfolio. But again, as I said repeatedly, with discipline because you are approaching something which is highly volatile.
Okay, fair point. I hope this has also helped you out get an understanding on the key stocks within the defense pack as well. Let me understand from you, Mitesh ji. Now, first 15-minute candle is almost about to be formed. Any key stocks that have sprung up on your screen that you would like to highlight?
Yeah, so first is Ashok Leyland. I think at around 247, Ashok Leyland is looking pretty promising on the chart. And what we are looking in Ashok Leyland is around a target of close to 260, 270. Another stock which is looking pretty promising is SBI Life at 1855. So
Okay.
SBI Life is also looking pretty promising. And again, Sakshi, with a disclaimer, we have given a sort of a good target or a big target on the big boy Reliance. So Reliance
Okay.
1875 is also looking good. We are of the view that Sakshi, in the next 6 to 9 months, the stock has the ability to deliver 8 to 10% on the upside. So yes, Reliance is also looking pretty promising at the current level.
Okay, Reliance is also looking pretty positive at the current levels. We'll definitely keep an eye out on Reliance Industries as well at this point. One more space that I wanted to discuss with you, Mitesh, is the telecom space. Bharti Airtel is coming continuously in momentum. We're also looking at names like Tejas Networks, HFCL has been in move. The PSU names MTNL has been in news as well, in momentum as well. Today Tata Tele is also higher in trade. What exactly is happening in the telecom space? Is there a fresh wave of momentum?
Looks like you put it right way. Two stocks which I would like to mention. First is TTML. If you look at the pattern of TTML, it is really encouraging. Above 65, it's a clear-cut breakout. So with a stop of 65, one can go long for the potential target of 75.80. And one silent mover, very strong chart pattern, a very steady performance on the chart is Bharti Airtel. Now the stock is trading at a 52-week high or probably an all-time high. If you look at the chart pattern of Bharti Airtel, slowly and gradually the stock is forming higher top higher bottom formation. The delivery based volume is also inching up. So if you're talking about Bharti Airtel, yes, this is the stock which I would like to add into my portfolio even at the current level. Reason being is this, that in the last 5 or 10 weeks, the stock has made an intermediate high at 1904 on 15th of April 2025. After that, for at least next 7 weeks, the stock was in the silent period. So from 15th of April, Shakshi, to 13th of June, 30th, 1-3, the stock was in silent period. And since last 2 weeks, it's a very strong heart of our bottom formation, which advocate the fact that the now stock is entering into a new range between 2300, 2500. So yes, it's a buy call at the current level.
Buy call at the current levels on Bharti Airtel, also positive on Tata Tele from the telecom space. You can definitely look at that aspect as well, viewers. Now, let me just bring up for you some of the other stocks and sectors that we could probably be discussing with Miteshji. Miteshji, now help us understand on, the specific stocks within, say, the auto space. What are you looking at here? Within the auto pack, has anything of fresh come up on your screens within the auto pack, or do you think momentum will only come in ahead of the festive season? We are still about a month or two away from the festive season beginnings.
Yeah, so we are in between, Sakshi. So if you look at technically, you get a long and short opportunity. See, look at Tata Motors. Again, every time when it comes up, it has been beaten down and the stock is attracting selling prices. But on the other hand, if you look at the chart pattern of Maruti, it is slowly and gradually getting to the consolidation and getting into heart of higher bottom formation. So I think Maruti is where we are very bullish on. At 12,890, that is at close to 12,900, it's a strong resistance. Once Maruti close above 12,900 on a daily chart, it's a pretty strong breakout, which will again take the stock to 14,000 levels. So I think slowly and gradually, slowly and gradually, Maruti is making a strong footing. And going forward, Maruti is one stock where we would like to buy with a target of 14,000.
Okay, got that. I hope this has also helped all our viewers out in terms of understanding how to go about this space as well. NBFC space, I think, is further picking up some pace now. Bajaj Finance has moved to the top spot, now 2% higher in trade. We've already discussed Geo Finance. Now even Shriram Finance is up. So top three movers on the Nifty are from the NBFC basket as well. Remember, we also are looking at HDB Financial IPO day 2 right now. So that's also a lot in focus. How are you looking at the NBFC space right now, Miteshji, and any indication on HDB? Have you spoken to your clients about it?
No, Sakshi, see, per se, we are always of the view that in the secondary market compared to the primary market, there are good opportunities.
Okay.
So we have never been a big fan of advocating any IPO to our clients. Now, as you know, when such big IPOs are coming up in the market, probably the peers will give some sort of a buying momentum or probably give some sort of a opportunities. So we are not looking even at the entire NBFC space seriously from the viewpoint of a trend reversal. No, the entire space will spend a lot of time in consolidation. Because of this current HBD IPO, probably you will see a swing trade, but there are strong chances that if something goes wrong, probably we may hit hard on that trade. So probably it is advisable to avoid the space right now.
Okay, got that. Let's take a few moments to look at the markets yet again. 25,375, 130 points higher in trade. So the markets are inching to the day's high point. You can clearly see a 0.5% uptick on the Nifty right now. What's contributing to the gains? Bharti Airtel, that we have discussed with Miteshji just a little while back, 18 points contribution coming in from Bharti Airtel. HDFC Bank contributing 16 points. Reliance Industries, we've just discussed, it's his top stock that he's looking at as well, 13 points being contributed from that. Bajaj Finance, ICICI Bank, Axis Bank, Geo Finance, these are all the top contributors on the Nifty right now. So Bharti Airtel from the telecom space, Reliance from the conglomerate space as well, but banks and financials also ticking higher in pace. Those are the top stocks that are clearly supporting the markets to move up higher from here. What is your expectation now, Miteshji? We finished the series today. What is your expectation for the new series on the Nifty?
I think, Sakshi, slowly and gradually, now the indices, after such a strong volatile news from the volatile market, globally is making a strong footing and preparing for a big upside. So around, if you look at the chart pattern between 24,500, 25,000, the index has made a very strong footing. So now going forward, I think sooner than later we are talking about an all-time high, and why not? Diwali is approaching, so probably during the Navratri to Diwali season, we all on the air probably are talking about an all-time high. This is our expectations. So going forward in the next 3 to 4 months, what should be the strategy? The strategy should be to go very aggressive in some of the indices, along with sector-specific move, because we are of the view that going forward, a selected large cap stocks coupled with selected sectors are going to go up strongly. So now the question is which stock from the front line and which sector. So from the front line, we are strongly bullish on Reliance Industries, we are strongly bullish on L&T, we are strongly bullish on Maruti. So these are the selected pockets which from the large cap is looking interesting. As far as sectors are concerned, again, I repeatedly say that 2025 is all about commodities, be it a metal or be it a agri. So we are extremely bullish on sugar stocks, we are extremely bullish on fertilizer stocks, we are extremely bullish on metal stocks. So these are the three sectors which one should keep an eye on for the next 3 to 4 months. And these are the three stocks, Maruti, L&T and Reliance, where in the large cap one should be willing to take the position. And as far as the indices are concerned, Sakshi, one need to go pretty aggressive with respect to Nifty Next 50 index, Bank
Okay.
Nifty index, and mid cap Nifty index. So this is the mix with which one should approach for the next 3 to 4 months in the market.
Perfect. So that's the strategy that one has to go with. You did talk about the mid caps as well, where you are confident about the index. How about the choosing the stocks and selecting the stocks from this space, sir? What would you do?
Yeah, so this is again challenging, Sakshi, because again
Yeah.
within the mid-cap sector, it's a very big universe. So I think one should get themselves limited to this sector which I'm talking about. So per se, where we are putting our money into it, so we are putting probably our money into it. All the disclaimer that what stocks I have discussed, what sectors I have discussed, our clients might have direct or indirect position. So I will be selecting, say for an example, EID Parry at 1070 from the sugar space, Renuka Sugar from sugar space. From the auto, I will be picking up Ashok Leyland as a mid-cap story. From the fertilizer space, I will be picking up Chambal, Coromandel. From the metal space, I'll be sticking to Tata Steel, Hindalco. So these are the selected mid-caps idea where we will be building our positions right now.
Okay, fair point. I hope this has also helped you out in understanding a clear strategy there. Oil and gas is also in focus. Mitesh ji, we were looking at how because of geopolitical tensions, there was a sudden spike in crude oil prices, but now they're ebbing lower yet again, hovering around $65, $67 a barrel. Any suggestion on the OMC space, upstream oil and gas space, and even the city gas distributors? Are you looking at any space, these stocks within this basket?
No, within this space, I think, Sakshi, what I have said, we are extremely bullish on only one stock, that is Reliance Industry as of now. So
Yeah.
we are not looking at IOC or HP or BP or ONGC or
Okay.
for example IGL or NGL. I think the big boy is giving us enough opportunity to go long, and I think
Okay.
sizable money can be made in this stock in the next 6 to 9 months. What I said
Fine.
is that we're expecting around 10% of an upside. So I think it's good to go with large spaces right now within the oil and gas rather than sticking with the mid cap.
Rather than sticking with the mid cap. Okay, we will definitely look at that aspect as well. Let me also pull up a few more names, that we can probably discuss with you. PSU stocks I'm going to come to. We've already discussed defense and railways within this basket, sir. What about the power space? Are you looking at this fresh momentum within the erstwhile favorites like PFC, REC, NTPC, Power Grid? Are they finally showing us, after a long haul of consolidation, some move that could be carried on?
Very, very good spot, Sakshi. Very good question. A brilliant one. This is the space which is slowly and gradually picking up space. So if you look at Tata Power, if you look at NTPC, if you look at the DO, REC and PFC, yes, they are gathering the momentum, and probably in the next 6 to 9 months, you will see a marathon ride into this. So what we are looking at is a strong breakout on the weekly chart, which probably happen in the next 1 or 2 weeks. On the daily chart, it's definitely a buy side trade formation, no doubt about it. But for the trend reversal confirmation, we are looking at the weekly chart. So once we have that, probably in the next 1 or 2 weeks, we may come out with a buy signal in the entire space. But yeah, it is advisable to have some sort of a weightage in REC, PFC, and Tata Power right now.
Okay, got that. I hope this has also helped you out, viewers, in terms of selecting key stocks there. Let me just pull up some of the other ideas that we can discuss with Mitesh ji now. How about the traditional FMCG players, a big laggard space, Mitesh ji? Any sign of reversal here? Within Nestle, ITC, Dabur, Marico, any signs of improvement, or is it still a no-go area?
Absolutely no go area. I think it's testing patience. And as you know, Sakshi, as far as these are the sticky spaces,
Yeah.
okay? When the space goes up, they will go up like a madman. When they go down like anything. They are the rigid spaces, I would like to say. So once they spend time in consolidation, they will test your patience like anything. Once they start moving up, probably in next 1 year, they will give you a return for the next 10 years. So I think it might take a lot of time for the space to come back on the surface. So advisable to wait and watch.
Advisable to wait and watch. That's how you should definitely be approaching this basket. How about cement names, sir? Are you looking at this space at all with interest? We have looked at Ultratech, Grasim, some of the momentum coming back here, maybe even Ambuja Cement as well. What is your top choice of stocks within the cement basket?
Within the cement stock, I think we are extremely bullish on Sri Cement. So if you look
Okay.
at the chart pattern of Sri Cement, slowly and gradually it is inching up and making a comeback at 29,000. The stock has gathered the momentum from 26,000 onward. So Sakshi, probably this is the space which is going to taste 50,000 going forward in next 1 to 2 years. So probably the first cement stocks which we probably will be discussing on air at 50,000 rupees in the next 1 to 2 years. And in the small cap space or in the small ticket stocks, sorry, Ambuja is looking pretty promising at 563. So with a stock of 550, one can go long for a potential target of 580 and 600. So Ambuja from the small ticket stocks, Sri Cement from the large ticket stock is where we are eyeing at.
Okay, got that. So that's as far as the cement pack is concerned. Largely, we've discussed the macro trends. Now, I'm going to be coming to the capital markets related stories as well, Mitesh ji. Of late, we have been seeing BSE, which was one of the top choices before, and even right after the bonus split, has now started to come under pressure. Two reasons because of that. One is the expiry decision that SEBI has taken, which has allotted BSE the Thursdays as the expiry now, and Tuesdays for NSE. So there is some fear of loss of market share and volume in the interim. One is that. Second one, SEBI has now fined BSE 25 lakh rupees, minuscule amount, but for failing to provide equal and transparent access to corporate disclosures to all stakeholders and for the lapses in monitoring mechanism on client code. That is BSE for you. BSE, what's your outlook, sir? And for the rest of the capital market stocks, which is your favorite?
Okay, so as far as the entire capital space is concerned, let us talk about the steady movers. So if you look at the AMC space, if you look at the broking space, so we like that. So UTI, AMC, HDFC is what we are bullish on. Second thing is about broking space. We like MOSL, the Motilal Oswal, and Angel One. But as far as exchange stocks are concerned, I think once the stock shoot up very strongly, Sakshi, you don't need much of the reason for a strong downside. Only one small reason is enough. I think going forward, one need to be extremely careful with respect to BSA. Now at this value, at this level, we advise that one should book the profit and get out of it. Rather than that, advisable to get into CDSL, UTI, AMC, HDFC, or probably Angel One or Motilal Oswal. So that is where we are bullish.
Okay, got that. That's where you're bullish. First half an hour candle is out. We've slightly come off the day's highest point that we hit, but we're still hovering around that place. 25,363 at this point in time. 118 points higher in trade. A lot of the market breadth is still into the green, barring say the IT, PSU banks, realty and pharma. These are the ones that have kind of slipped in trade, but the rest of the pockets, oil and gas is higher. Remember, even India VIX after 2 days of losses is up by 1%. So keep an eye out on India VIX too, 13.1. Oil and gas, metal. So commodity basket in focus. You also have infra names higher. Private banks and financial services are up, but PSU banks are contradicting the move within the Nifty bank. When we look at the small caps, they are still hovering higher. Mid caps just about flat with a positive bias. Consumer durables now seeing some profits being taken off the table at this point in time. Jio Finance, Bajaj Finance, Shriram Finance as the top movers. Grasim again within the top movers. Bharti Airtel, Tata Steel, these are the top movers at this point. Dr. Reddy's, however, has slipped. There's a negative brokerage report there, 1.3% lower. Hero MotoCorp, Trent, Tech Mahindra and M&M. These are the pockets that have slipped. Within the F&O, Tube Investments, Geo Finance, these remain as the top movers along with Bajaj Finance, BPCL, Shree Cement, something that even Mitesh ji did talk about as one of his favorite stocks within the cement space. Anything else within the F&O pack you would like to highlight, Mitesh ji?
Yeah, two stocks. I think slowly and gradually making a comeback now. I think first is Astral. After a strong rebound, it has corrected, and now in the second rally, it will shoot up. So Astral at 1502 is looking promising. Second is Bandhan Bank. I think slowly and gradually above 160, it is ensuring that it is remaining above that. So about at 185, 82, Bandhan Bank is looking promising with a stop of 170 for the potential target of 200, 210. And as far as Astral is concerned, the stop should be 1480, potential target 1550, 1580. So Bandhan Bank and Astral is looking promising on charts.
Okay, got that. Well, Mitesh ji, we will leave you at that note. Thank you so much for being with us on the show today and helping us give an insight on across the spaces that we have discussed in trade, including both stocks and sectors, as well as an outlook on the July series and the market strategy for the next 3 to 4 months as well. Many thanks. Always appreciate your time with us on Business Today Television. Hope to see you soon. Till that time, hope you have a very good time as well.
Same to you, Sakshi. Thank you very much for.
Thank you. 25,384 back at 141. So day's high move again. So that's initial slight dip has also been bought into. Let's see whether this continues for the better. First half an hour has panned out pretty good in trade. Will 25,400 come in? Seems likely. Let's see whether that happens and there is some more momentum that can be aided from some of the sectors as well. It's the heavyweight pockets, banking, private banking names, Reliance Industries, Bharti Airtel completely supporting the markets at this point in time as well. So 25,380 is where we are at. Let me also highlight for all our viewers within the broadest index, the Nifty 500, what's moving up very, very strong. You can see Ind Swift Limited 20% higher. You can look at names like Western Carriers about 9% higher in trade. Order flow news there. Alok Industries is about 8.5% higher. You have names like SMS Pharma. You also have Gabriel India as up and about in trade. You have names like Indo Solar that's buzzing, and Newgen Software Technologies within the mid-cap IT basket that continues to show us some traction as well. Already marked out the top movers for you within the finance space. Geo Finance, you have Bajaj Finance and Shriram Finance as the top movers on the Nifty. We'll leave you at that, viewers, but do stay tuned with us on to Business Today Television. Throughout the course of the session today, we're going to be speaking to a variety of top market experts to help you understand the right strategy. 12 noon, I'll be back with daily calls to answer all your queries about the stocks in your portfolio. So send in all your questions at 12 noon. You can also live speak to our top guests and take a custom-made advice. Stay tuned for that.
a bit of desi swad